It is fortunate that people of the country do not understand our banking and monetary system, because if they did, there would be a revolution by tomorrow morning. Banks are the foundation of any economy. In theory, you can start a bank and start making money. But there is a simpler way. You can launch a cryptocurrency and become a crypto billionaire in an instant. If you think cryptocurrencies are a scam, you probably don't know much about banks. In this video, we'll look at 5 financial facts that banks don't want you to know. Borrowing from banks and investing elsewhere can help you make money. Mark Zuckerberg used a 30-year mortgage to finance his $5.95 million Palo Alto home, which is 3 miles from Facebook's headquarters. He was 28 years old and the world's 40th wealthiest person at the time, worth an estimated $15.6 billion. Why would you go into debt when you have billions of dollars to spare? He could easily buy a dozen $6 million homes in cash without blinking an eye. Why take out a mortgage? We discussed how banks provide such a low ROI that it's not worth keeping your money there because it doesn't even beat inflation, so you're losing money. In this case, however, it is the other way around. In the United States, the inflation rate is 2.5 to 3%. So any money borrowed that is less than the inflation rate is considered free money. Zuckerberg's mortgage rate was slightly higher than 1.05%. If you do the math, the bank loses because the mortgage rate is lower than the inflation rate. For example, suppose you borrow $1 million at a rate of 1.05%. Before the pandemic, the average rate of return on a savings account was 2.4%. Now, it is less than 1%, but let's stick with 2.4%. Even if you deposit the $1 million in another bank, you will earn $24,000 per year, while only paying a monthly payment of $10,500 to the bank that lent you the money. There's no point in tying up your own money when you can use it for more profitable things when you can borrow for free. Of course, when dealing with small sums of money, this may not make sense because the difference isn't that significant. When it comes to large sums, however, betting around 1%, 2%, or 5% can mean tens of thousands, if not hundreds of thousands of dollars. It is a fraud to keep your money in a bank. The top banks, such as Citibank, offer less than 0.5%. There are banks that offer higher rates, but they are still less than 1%, especially since interest rates are currently at their lowest. While inflation is 2.5%, your money grows by 0.5%. The intrinsic value of your wealth is decreasing year after year. You would be far better off spending that money now rather than putting it in a bank. Your money's purchasing power will be far less in a few years than it is now. When inflation is skyrocketing, as it is now, asset prices such as homes and stocks rise exponentially, as we have seen in the last year or so. A bank is a place to keep your money, not to make it. Credit cards are the nuclear weapons of banks. 70% of Americans who have credit card debt admit they will not be able to pay it off this year. If you can't pay your credit card debt on time now, what makes you think you'll be able to pay it a few months later when it's much larger? In other words, 70% of Americans are on the verge of becoming indebted. More than half of those polled, 56%, say they've had credit card debt for at least a year, and the majority will continue to carry it for many years to come. Almost 20% believe it will take them more than 3 years to pay off their debt, while roughly 8% are unsure when they will be able to do so. And that's how banks usually make their money, Because most people spend without considering how they'll pay it back. They are accustomed to a certain standard of living and are willing to maintain it even if they cannot afford it. The higher your income, the lower your interest rate. Banks are not charitable organizations, but rather for-profit corporations whose goal is to maximize profits. They have shareholders to whom they must answer, and they will not survive if their business model is not profitable. When you are a billionaire, for example, the bank can rest easy because no one is concerned that you will default on your loan, and if something happens, if you can't make your monthly payments, you can easily sell a portion of your business to pay back your mortgage, making lending money to you almost risk-free. In fact, that is how the banking system evolved over the centuries, with banks only working with nobility or people with money or assets that generate consistent income such as land. When compared to the average employee who may become ill, be unable to work, or simply lose his job, if you are barely scraping by, lending you money is extremely risky. If you want a lower mortgage rate, a lower credit card rate, or simply better terms when borrowing money, you must first improve your financial situation. Banks also offer such low mortgage rates in order to build strong relationships with wealthy people so that when they need a larger loan, they will come to them. Blockchain and cryptocurrencies promise to change that and democratize banking, and they most likely will to some extent. In fact, banking has become so democratized that everyone now has access to financial services. Every bank has the authority to create money from thin air. The only bank that's allowed to create money is the Fed. It is the source of the dollar and the only institution with access to the printing press. However, the banking system is designed in such a way that every bank in the country, if not the world, is permitted to create money to a certain extent based on the amount of money deposited in the bank. What do you think the bank will do with the money? There's no point in keeping it because they wouldn't be able to pay you your pitiful 0.5%. Instead, the bank lends your money to someone else who wants to buy a car or a house and collects interest, which is frequently much higher than the 0.5% it pays you. The average credit card interest rate is 20%. That's dozens of times more than the bank will pay you. The point is that the bank will not tell you who it will lend your money to. When you check your account, the bank will tell you that your money is still there and that you can withdraw it whenever you want. So if your money is still there in the bank, where did the money go to lend to someone else? This is referred to as a fractional reserve banking. Banks are only permitted to keep 10% of deposits and lend the rest. For every $1,000 you deposit in the bank generates an additional $900 and lends it to someone else, bringing the total to $1,900. The bank made $900 appear out of thin air. It's not as difficult as you might think because the computer only has digits. For more videos like this, please make sure to subscribe to our channel and don't forget to hit the like button for the video. Thanks!